Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Let me give you the objective, okay? So the objective here is we're going to be an active trader, active or tactical trader using option strategies to grow an account, okay? There's a million different strategies you could use, but the premise here is you're picking different stocks, you're doing different trades month in, month out, okay? I like that, Ethan. Tactical trader with tactical gear. That's nice. That is nice. All right. So we have to have some core risk or portfolio management rules. Okay. And that's really going to guide, this will guide our structure. Okay. And so what I'm assuming here to give us like a big picture, okay, let's say I have maybe a $25,000 account, okay, $25,000 account. And I want to actively trade this money. So I don't want to have necessarily a diversified portfolio of covered calls. We already talked about that. I just basically build a watch list, and I want to be looking at that watch list and finding good setups and doing, trades. So first thing I want to talk about are what are some core risk rules that are going to guide my position sizing. I also want to talk about what are the core strategies I'm going to use. Okay. And then, we kind of want to discuss, well, what are the core patterns or setups? Let's go setups. I'm like in the alliteration with the S here. Core setups I'm going to trade. Okay. All right. Actually, let me say trade here. Okay. So I'm going to give you what I think would be a decent approach if you're an option strategy trader. Okay. So these are the things that I do for option selling, which is kind of my bailiwick. As for the core risk and portfolio management rules, let's start there and let me draw a picture of what we're trying to accomplish. Okay. This is something that we introduce in Legacy on the in the Options 1 course. So for those of you that have seen it before, well, don't fall asleep on me, but I'll try to throw out a couple entertaining remarks here. So one tool that we use as traders to track our performance and get a sense of how effective a strategy is an equity curve. Okay, equity curve. And essentially what it does is it plots the value of the account over time. So the horizontal axis is time and the vertical axis is going to be your account value. Okay. So what we're trying to do is grow the account over time. Okay. Yeah, this will all be in my notes, Casey. So I'm trying to basically make my account go up and to the right. I want to make money over time. But it's not going to be perfectly linear like this, okay? This is pretty much impossible unless you're like, I don't know, unless you're a market maker and all you do is just make money every day based on transactional volume. But as traders, we're going to have drawdowns, we're going to have losses, so there will be fluctuation, right? So there's two ways it could go, right? You could follow something like this, okay, a nice little roller coaster. Or you could follow something like this. And obviously, we'd like to be the blue line. Everybody agree with that? We would like to be the blue line. I would like my account value to grow over time consistently, but not have so much volatility that I want to give up midway through, right? So the question then is, what can I do? What can I do to become the blue line? What can I do to become the blue line? How can I shift my approach, change the way I behave as a trader so that I'm more likely to be the blue line? Okay. Well, let's think about some characteristics of the blue line. So we've got what? Lower volatility. Okay, so the highs aren't as high and the lows aren't as low. We've got less emotion. We've got quicker recoveries. Okay, and you don't really have no big winning streaks or losing streaks. In contrast, the red line is, somebody who's trading Bitcoin and they make a bunch of money, they lose a bunch of money. They make a bunch of money, they lose a bunch of money. Somebody who buys 10 call options and hits a home run and then buys 10 call option and blows up, And so, I mean, you could argue, hey, the red line is more fun on the up moves, and that's true, but it's not as fun on the down moves. Okay. So whatever your investing and trading approach, you have to be comfortable with the volatility or else you'll quit. You have to be comfortable with the volatility or else you'll quit. You'll give up. And so the thing is, when you have big winning streaks, you're tempted to quit because you want to dodge a losing streak. Like if you ever won like 5 or 6 or 7 trades in a row and you're like, maybe I should stop. I swear, if I place another trade, I'm due for a loser. Right? I have, sometimes when I'm placing condors, I'm like, hey, I just won 5 months in a row. Maybe I shouldn't enter the 6th month. We're due. And so, you stop. Or maybe you just did 5 stock trades and you won all 5 in a row. And it's like, maybe I should pack it up here and wait for a couple of days because I'm due for a loser. On the flip side, when you have a losing streak, you lose. You're like, I got to pack it up, man. This is no fun. You're tempted to quit. So big winning streaks and big losing streaks tempt you to quit. And we want to avoid that temptation because if we quit, we're never going to recover and we're never going to continue to effectively grow our capital.